Hang Seng is opening after a day's break, so it is absolutely flat with some negative bias.
Inflation is a slightly bothersome number because it's come in not just higher than street expectations, but that ugly 7 handle which we thought we would put behind us, 7 has come back.
The government is likely to use funds mobilized from windfall gains tax levy to help public sector OMCs to stay in shape.
The next round of rally could actually belong to small caps.
They believe that the microfinance is at an inflection point, and the best way to play this is through Bandhan Bank, IndusInd Bank and L&T Finance.
18,035 on the Nifty.
Probably going into the third quarter of the financial year or the fourth quarter of this calendar year quite strong.
We definitely see that the risk on our earnings estimates are still on the upside.
The block is done, so Standard Life has sold 2% equity in HDFC Life.
Driver would be engaging the youth power.
We believe we exist for the capital formation of the economy.
The Indian rupee is 0.5% higher compared to the dollar.
130 points on the frontline index, 450 on the Sensex.
Well, you know what, we can practically play the same tape every day and it won't be wrong. It's been that kind of a market. Welcome to Closing Bell. I'm Anuj from Delhi studio, and of course with me Prashant and Nigel from Mumbai. And what a strong day once again. Nigel, Prashant, you know, we are set for first close above 18,000 on the Nifty in the last 5 months. Last time it happened was in April, I think 2022. And today's move is very strong, in particular in the large caps, the large and not just large caps, the largest stocks, you know, whether it's names like HDFC Bank and HDFC, ITC, Infosys, Reliance, Larsen and Toubro. It's almost as if, you know, there's some kind of a basket buying in some of the large heavyweight index stocks. So today's FI number will be once again important to watch. My sense is again you will see some massive buying from FIIs. And next levels to watch in terms of closing 18,300 and the lifetime highs, because it looks like the market's going there and people are still in denial, which is something which has fueled this rally. And my sense is people are still in denial about this rally, and maybe the market continues to chart higher courses. Prashant, Nigel, hi, good afternoon.
I mean, Anuj, hi, Nigel, hi. No, absolutely. You know, you can repeat the tape because the values are also, only the index values are different, right? But the fact is that every day 100 points, yeah, exactly. Almost like clockwork. The names of the stocks which are doing well, the rates, of course, will change. That's also not very different. It's pretty broad-based. It's pretty deep. It's not as if, I mean, you know, it's a narrow rally in that sense. Broader markets, small caps, mid caps are doing well. So all up is what we have on our hands once again. I mean, just a couple of nifty names like IndusInd, Bharti, Tata Consumer, Tata Motors, which are the top gainers. And you don't have any big 3, 4, 5% kind of gains. That's all in the 1.5% to 2% range. Actually, the biggest gainer is that 2% in IndusInd, at least on the Nifty at this point in time. It's just that, I mean, you know, you only have about 7, 8 names on the Nifty which are lower and down by just less than 1%. So, you know, what is up in a steady way, and there is just very few things which are lower. That is the condition as far as the Nifty goes. Nigel, hi.
Well, hi, Prashant. Hi, Anuj. Plenty to talk about. Final 60 minutes coming up. We're up 150 points. Mid-cap index doing a relative underperformance, though, in today's trading session, lagging a little bit in comparison to the headline index. Let's see what happens. First up, let's run you through what we have lined up on the show for you. Microfinance companies like Bandhan Bank, L&T Finance Holdings, and IndusInd, they are buzzing in trade after Goldman Sachs bets big on the sector. Details on that report coming up. The IRDAI has asked insurance companies to dematerialize all policies. What will be the fallout for depositories and insurers? Well, a complete explainer coming up on the show. And we'll also get chatting with our market experts. We'll have Mehrbun Irani as well as Rupin Rajguru. Jay Bala of Cash the Chaos as well will be joining in to tell us the levels that he's tracking on the index, so stay tuned for that.
Well, you know, the screen is eerily similar to last Tuesday when we had the financial Nifty expiry. That day also, I remember the mid-cap market was underperforming, and, you know, the financial Nifty was sort of beginning to make a move somewhere around 230. The Nifty Financial Services Index, that is very large volumes it generates nowadays on Tuesdays. So it will be interesting to see what happens on the weekly options expiry, because, you know, the game on Nifty and Bank Nifty has been going on for some time. Financial Nifty has just started to participate. Last Tuesday was, last Tuesday rather, was one crazy day. Mitesh Thakkar is joining us now with some trading ideas. Mitesh, good afternoon. Very strong sort of day once again. Your thoughts on the index and your stock calls at 2:30?
Anuj, yes, a good day. In fact, you know, the good thing is that, as I said, after the gap up, you know, there was a mild selling, and then since then, while the market hasn't moved up very strongly, it's been inching on the upside. There's no strong visible supply pressure. So in that sense, I think, you know, traders can now trail the stop loss just below 17,980, which is the pivot on the pivot before this breakout. So maybe 17,970 or 965 could be a good level, and maintain longs. On the stock side, Britannia is something which is after the consolidation is trying to break on the upside, and that could be a trade on the buy side. It's a buy with a stop just below levels of around 36.90 for targets of 37.80, 37.85. And Concor is on the sell side after a few days, you know, some negative trade over here. Sorry, not Concor, Coromandel. Coromandel is on the sell side. That's giving signals of profit booking here, and that's a sell with the stop just above levels of 1,047 for targets of around 1,000 upside.
Okay, all right. Thanks very much, Mitesh. Appreciate you joining in and running us through what you are making of things. Stay on the long side. That's the message. Mehrabun Irani is joining us now to take some questions. Mehrabun, good to have you with us here. Thank you very much. Your thoughts, Mehrabun, on you know, how you're seeing things with this move, which is continuing. I mean, we are just, what, 2-3% away from new highs, or at least reclaiming the older highs first. Your thoughts?
I think if I'm allowed to borrow a phrase which Anuj just used a few minutes ago, which I overheard, I think the entire market is still in a complete mood of denial. I think before you sleep for the night, you get at least 3 to 4 social messages being circulated, talking of virtually everything negative. Let's be very honest, Prashant. I think you also cover global markets quite well for the channel. I think we all talk of global factors being very negative, nothing to suggest things will improve soon. We talk of US dollar index, we talk of inflation, we talk of shortages, we talk of a possible recession in the US, which I believe will be a soft landing rather than a full-fledged recession, but we know problems are there. But in the midst of all this, what has happened is foreign money has started coming back to India. Also, relatively, the gap between India right now, in terms of positives, vis-a-vis the rest of the world, I would say, has widened considerably. So why not look at India favorably? This is not to state that I'm denying that factors in front of us are negative. Factors are certainly negative. But people who have looked at only those are virtually feeling left out right now. So I continue to reiterate what I have been mentioning for the last few weeks or the last few shows wherever I have come. I think we need to continue to wear the blue cap of a trader and not bother too much about the red cap which an investor wears. Watch the S&P, Nasdaq, Nifty in the past. We were watching that. Now we are watching the futures and we are continuing to trade. So it's becoming very difficult to predict on a day-to-day basis what's going to happen tomorrow. Nobody knows right now. So I state the same thing. The bottom-up approach is very important. Go ahead and buy stocks which valuation-wise you feel comfortable. You feel that going ahead the earnings will grow for them, and therefore certainly the upside should be much more than a possible downside, even if the market corrects or collapses for any other reason. So I think a bottom-up approach is very important, which investors need to learn. It's very easy to get attracted to stocks which have faltered, but don't forget there are quite a few stocks, despite faltering, are still very expensive. But you do a selection process, do the bottom-up approach, buy into select stocks, and pay the momentum right now like a good trader would do.
Okay, hi Mehrabun, noted that. Mehrabun, I wanted to view on a couple of these pharma names, Ipca Laboratories or Strides. Both of them have perked up in the last few minutes. Any view on these, or do you have a different preference in the pharma pack?
I think last 2 years I have been 100% negative as far as pharma stock goes, barring maybe a couple of stocks like a JB Chemicals or a Kaplan Point Labs. But let me accept and admit one thing. I think the levels at which they are, I think the downside from here for most of them now could be limited and the upside could be there. So from a trading angle, I think people can go ahead and buy into pharma stocks because they look relatively attractive than where they were maybe a year ago. I think don't forget the stock has completely underperformed the market. But I would not look at it because the point is I have been going on stating the structure of the pharma industry, Indian pharma industry, especially companies which are having exposure to Europe and to the US, I think has completely got shattered. And to believe the management, which I never do, especially pharma management, who keep on saying this is a passing phase, the answer is not. It's going to take quite some time. The values at the prices at which they were selling have come down considerably. To expect anything major to happen for any of them, I think would be foolhardy. I think certainly, yes, there could be upside in some stocks. The couple of stocks which you mentioned included in them, but that would be purely from a trading angle. So if you feel you're fleet-footed, sharp enough, smart enough to exit at the right time, you can go ahead and buy into them. From a fundamental angle, longer-term angle, I think despite the fact that valuations have come down quite sharply for most of them, not in a hurry to recommend any pharma stock, barring maybe a Kaplan Point Laboratories, which I've been tracking for the last over 10 years.
Okay, by the way, just pull out, Mehboob, good afternoon. I wanted your thoughts on a set of stocks, but just pull out Bandhan Bank's intraday chart. That is now at high point of the day. L&T Finance, of course, has been high since morning. But Bandhan is the one which stands out in the last few minutes of trade. I mean, among the largest stocks, just look at that move in Bandhan. And Bandhan has had this habit of every time going to 270 and bouncing back from there. Nimesh alerted us this morning that Bandhan, L&T Finance and a couple of others could be active because that was his standout brokerage report as well. Let's just revisit that and then I'll ask Mehboob for his thoughts. Nimesh, over to you.
Hi, Regina. So if you believe the Goldman Sachs report, they believe that MFIs, microfinance companies in India are at an inflection point, and the best way to position would be through three stocks, which is Bandhan Bank, IndusInd Bank and L&T Finance. Now all these stocks are down 40-50%, or in fact at a discount to the 10-year averages, and are not pricing in any sort of a recovery in terms of ROAs as well as recovery in the growth as well. But Goldman Sachs believes that second half of FY23 is going to be quite strong for all these MFIs, not only from a loan demand point of view, but also the fact that most of these companies have provided aggressively, so that's behind now. In terms of individual recommendations, Goldman has a buy on Bandhan Bank with a target price of 390. They believe Bandhan is likely to deliver best-in-class ROAs over the next 3 years. As far as IndusInd Bank is concerned, they have a buy rating with a target price of 1187. On IndusInd Bank, Goldman believes that the bank will be able to deliver a PPOP growth of over 19% CAGR over the next 3 years, with a healthy ROE of 1.7% and an ROE of over 15% for the next 3 years. As far as L&T Finance is concerned, even there, Goldman believes that the bank will be able to deliver a PPOP growth of nearly 18% CAGR over the next 3 years on the back of healthy ROE of 2.7% and an ROE of 13%. So these are all strong numbers that Goldman believes all these MFI companies are going to report. So that's why a big upgrade on MFI from Goldman Sachs. They believe the entire sector is at an inflection point, and the best way to play would be IndusInd Bank, Bandhan Bank and L&T Finance.
Nimesh, thanks a lot for that. All three doing well. Mehboob, afternoon. You would have heard Nimesh. Out of these three, would you pick any? If not, what would be your own, sort of pick in this space?
I would say IndusInd Bank is at least 2 to 3 lines ahead of Bandhan Bank, and I would not consider the third name because I don't track it. But I think as far as Bandhan Bank goes, since you mentioned about Bandhan Bank and the stock having gone up right now, Anuj, I would just like to state one thing, that the phase which Bandhan Bank faced in the quarter 4 of FY22, because I was the first quarter, I think there has been a hell of a change. I think delinquencies improved because of forward flow from restructured pool. There were regulations changed, Assam floods happened, so the complete book slightly got a little bit topsy-turvy for Bandhan Bank. As a result of it, the quarterly one of FY23 was not very good and the stock came off very sharply. At the present level, certainly I believe that Bandhan Bank has some distance to go from the present price, and I would certainly possibly feel that if somebody wants to buy, I'm not going to stop him. In fact, I will say it's not a bad decision at all to go and buy into the stock, because the stock has come off very sharply from much higher levels. But between the two, if you ask me, IndusInd Bank, I would say IndusInd Bank numbers for the last quarter were brilliant, and I do believe the stock has at least another 10% to go from here. Clear disclosure, I'm holding IndusInd Bank stock. I think at the present price, between the two, if you ask me to select, I would say maybe from a trade angle, Bandhan Bank could outperform IndusInd Bank, but the level of comfort is certainly much higher for IndusInd Bank.
I mean, even names like in the microfinance space, if the theme is microfinance, of course, all kinds of players. Saturn, for example, Saturn Credit Care, that was from 100 at the beginning of this month. The end of last month was at 100, at 140 now. So that's a cool 40% just this month. And that's done pretty well. Over a longer period of time, none of these stocks really have gone anywhere. Bandhan, of course, is the leader, which is still, I mean, a huge underperformer relative to even banking, financial services. All forget about the rest of the market, of course, which is done very well. Mehrabun, any other sort of thematic ideas, spaces that you're focused on, that you're working on, you think there is still a lot of value?
I think capital goods sector, I think I have been quite positive for quite some time. The problem right now is the valuations, if you ask me. For the present level, is the money to be made? Answer is yes, but if there is a pullback, I would say the conviction would be still higher. I think maybe a name like maybe an ABB, if you take it a KSP Pumps, you take a Foseco India, which is going at a valuation of less than 30. The names are plenty. But from a theme angle, I think I continue to state what I've been stating for quite some months now, is the cement sector. I believe the cement sector, there could be a bottoming out quarter, the quarter D2, which is going to come for the September quarter, the numbers which you will see with the bottoming out quarter. Cement prices have been subdued over the last 1.5, 2 months, especially in other regions barring South India and East India, where the prices moved up a little bit. But we are seeing a lot of changes happening in the sector, with Adani's taking over Holcim's stake as far as Ambuja Cement and ACC goes. Adani's have clearly stated the intent is to be 100 million ton per annum capacity unit. Now, whether it's Ambuja or ACC combined, because both have a capacity of around 32 million tons. If you look at the valuation gap between, say, an Ambuja vis-a-vis an Ultratech, which has a capacity of 410 million tons, I think the valuation gap is very, very high, mainly because of the reason Ultratech is Ultratech. Across the country, super balance sheet, super geographical presence, network is brilliant. But if you look at Ambuja right now, I think the cost per ton is going to come down very sharply for Ambuja. They will not have to pay the royalty payment to Holcim. They will be getting the fly ash and maybe imported coal also at a much lower level. Don't forget, Ambuja has lost market share over the last 1.5 months because Holcim never did too many things. They were quite passive as an owner. And we all know that Adani's are going to be aggressive as far as Ambuja goes. So I personally believe the valuation gap is going to come down, and that itself is the biggest trigger for the Ambuja stock. Now, somebody may argue that the stock has gone up from 370 to the present 480. Should I still buy into it? If you are an investor, I personally believe you should certainly go and buy into it. I see the valuations or the re-rating as far as Ambuja happens should happen over the next 2 to 3 weeks, with analysts coming out with buy report. This is my personal feeling, because there could be an analyst meet coming soon. Management will spell out ideas. We are going to expand this, we are going to expand it, and suddenly you will say, oh, this is the company which is going to go the Ultratech way. So why there should be a big valuation gap? Also, let's not forget the gap in the EBITDA per ton of Ambuja and ACC vis-a-vis Ultratech also should narrow down considerably. So I think these are the factors in favor of Ambuja and ACC. I think this should be the leaders as far as stocks goes in the cement pack. And the cement pack, entire cement pack, even otherwise, I'm quite positive, and I've always been recommending a stock like Dalmia Bharat. So right now, if you ask me, my selection would be Ambuja at number 1 and ACC at number 2, followed by a Dalmia. As far as Ultratech goes, I have always stated it's like a core stock. I'm not saying one should sell off Ultratech, but I would prefer at the present levels the 3 other names which I mentioned.
Yeah, all right, got that on the cement names. Mehrabun, you track the Bajaj names, the frontline names, But Maharashtra Scooters and Bajaj Holdings, they have holdings in these large names. And you pull up a last 1 month chart. My director will just get that up for you. These stocks have done very, very well. In fact, in today's trading session itself, Maharashtra Scooters is flying away. I think we should pull up a 1 month chart actually of both these two stocks. Merbun, any view on these holding companies? It seems suddenly both these two stocks, they're up close to 25% in the last 1 month. So I ask.
Nigel, let's be very honest. I think holding companies is the way you value it. Do you value it at 40% discount, 20% discount, 50% discount? I think it's anybody's call. And allow me to state that I have not seen too many holding companies making consistent money for investors. I have not seen it. But at the end of it all, as far as Bajaj Holdings and Maharashtra Scooter goes, both of which I track, I definitely see a lot of value in them despite the fact that they have gone up. The point is the companies whose shares they are holding in the holding company structure, I think those companies themselves are doing well and should do well going ahead. So if I was an investor holding these stocks, I would say I would continue to hold on. As far as valuations go, as I mentioned earlier, Nigel, you may give it a 30% discount or 40% discount on the core value of their holdings. Somebody may argue, why should I give it 30 or 40% also? Because these companies are not going to go ahead and sell off their holdings and distribute it to shareholders. That doesn't happen. That seldom happens. So I would say that I'm very comfortable because it's Bajaj. So if you ask me specifically, Bajaj Holdings and Maharashtra Scooters vis-a-vis holding companies of other groups, I would certainly prefer the name Bajaj. And I would say, yes, there is too much of value into both these names which you mentioned.
Okay. All right. Well, Merbun, thanks so much for joining in today and giving us your view on a whole host of stocks. Always good hearing your thoughts. Well, let's focus on another stock, All Cargo Logistics. Well, that's a stock in focus. Mangalam joins us to tell us why is that stock flying away. Mangalam.
Well, All Cargo is doing very well in today's trading session, and that's primarily because of the outcome of the analyst meet that the company had yesterday itself. The presentation was uploaded post-markets in yesterday's trading session. The FY26 targets that the company is given. Remember, in FY22, they did revenues of a little above 20,000 crore mark with margins of around 7.5% odd. But for FY26, the company targets revenues anywhere between 25 to 30,000 crores at the upper end, with margins between 9 to 10 odd percent, 24,000 to close to around 2,700 odd crores, 2,400 to about 2,700 crores in terms of an EBITDA. What would comprise this overall revenue as well as margin guidance that the company is given? Express plus contract logistics, which is the smaller part of their business, should see revenues of almost 2,700 to 3,500 crores and margins of anywhere between 10 to 12%, EBITDA of 400 to 500 crores. The larger part of their business, which is the international supply chain business, should see revenues of anywhere between 20,000 to 25,000 crores with EBITDA of 1,700 to 2,000 odd crores. And then they do have other clutch of businesses, which could be anywhere between 1,500 to 2,000 crores in terms of revenues with EBITDA of 300 to 350 odd crores. Importantly, on Gati as well, the management has said that they've reduced the gross debt of the company and things are looking much better for Gati as well. From FY20 levels of 411 odd crores, the gross debt is down all the way down to 159 odd crores. They have 14% share in the global LCL market. They're number one out there. Digitization is a big theme for them, with more than 60% of their orders coming in digitally, and the cash that they have on their books of 721 crores also gives them visibility for further capex as well. What is the key thing that the street is watching out for in the near future from All Cargo Logistics? They've announced the demerger, so how things pan out post the demerger. Here on CNBC-TV18 itself, the management in the past has said that 90% of the group's revenues will be in the current listed All Cargo entity itself, and they are looking at restructuring in Gati itself, and perhaps the management is looking to go ahead and buy KWE's stake in Gati, which is the existing promoter of Gati. So that would be one of the big triggers to watch out for both All Cargo as well as Gati.
All right, Mangalam, thanks very much for that. We'll take a quick break here now and come back in a bit. 135 on the Nifty, so 18,071 is what we have going on right now. Look at, just put up Sun TV if we can. It's seen a very sharp spike from 5:15 to about 5:30, 5:35 in the last couple of minutes of trade, and actually the last 7-8 minutes now. But that's Sun TV. Bulk of the move appearing out of nowhere. 5:34, and bulk of those gains are still kind of being retained. We'll see. As I said, take that quick break. We are back. Market technicals in focus with Jai Bala of Cash the Chaos on the other side. Okay, welcome back. We've got the market, which is holding absolutely very, very steadily. 18,071 is where we're at. Jay Bala of CashTheChaos.com is joining us for some questions. Jay, good to have you with us here. You know, you've been the last two interactions at least calling for the extension of this pullback, so that it's continuing 100 points every day like clockwork. And do you think is just a few percentage points away a new high? That 18,600 level. Do you think we do that? And if we do, then what after?
Yeah, that's a very important question, Prashant. Thanks for having me on the show. See, on the first week of August, I had given 20% probability of the Nifty clocking fresh highs above 18,600. It registered in October 2021. But you know, the question, as you rightly put, after that, it's in my opinion, it's not going to be a sustainable one. The Nifty is either going to go closer to the all-time high or slightly exceed the all-time high, and then it's going to resume the correction. This is a very complex correction for normal people. We call it in elective parlance as a irregular correction. So basically, that's the pattern I'm working with at the moment. But you know, it depends on what the US markets are going to do from here. As long as the S&P futures stays below 4217, I think the markets, the bounce that it saw from June, the Nifty likely peaking around 18,224 to 18,559 is a possibility. But you know, the markets haven't turned lower, so don't get short yet.
Okay, don't get short. Hi, Jay. What about the IT index? Debates on valuations, but you know, that one has been a big underperformer this year so far. Do you think it's showing signs of bottoming up? And also, if yes, then what's your preference in the IT pack?
Yeah, see, the Nifty IT is consolidating between 26,000 and 30,500. If it were to take out 30,500 in accelerative fashion, I would think that the bottom is probably, and you know, I'm anyway bullish on the IT sector from a medium-term perspective. And you know, when I called for a correction in January, I was expecting to come somewhere close to 25K. The market have come somewhere close to that. But on a relative strength basis, on a front lines, you know, an INFI is showing very mild relative strength compared to TCS. But if TCS were to exceed 3,300, I think that will change. But right now, as things stand, you know, it's a bit, you know, I would say a positive consolidation, but a lot of work to be done. Until 30,500 is not taken out, I would still view it as a you know, basing pattern here.
Okay. The other point, of course, is the entire banks, right, Jay? In terms of what that pack does, which is done well, and it's kind of participated along with what the Nifty has done. Same kind of view like the Nifty here, or something different?
Yeah, very mildly different, Prashant. The banking sector is showing mild signs of exhaustion here, but you know, but it's still not turned lower. But as long as the index stays about 39,250, assume the least path of resistance is higher, and probably the October high of 41,000 odds that's going to you know, get attracted towards that level. But watch SBI. As long as SBI stays above 530, or if it turns below 530, that's going to be an early warning sign that this sector has probably turned. You need to also watch ICICI. Now, I've been pointing out for the last 2 weeks ago that, you know, SBI and ICICI have the probability of clocking fresh 52-week highs, and they have done. And SBI has come very close to its price objective of 570. So, and it's showing signs of turn from here. 530, as long as it stays above 530, it's all okay. But if it gets below 530, we want to get a bit careful.
Just hold on to that thought. You know, HCC, there's a release that's come up on the screen. The lender has invoked pledge of around 5 crore shares. Or the reason that you're seeing a bit of an uptake on the stock is because there was a bit of an overhang with regard to this. I think they briefly mentioned about this in their con call as well, that this is likely to happen, and that's precisely what's happened. So it seems the street is reading it positively that the lender has invoked that, and these 5 crore shares now, they move to the lender entity. So that was a bit of a trigger. That's why I think we're seeing a bit of an uptake on the stock as we speak. That's HCC. Let's see whether or not that's the overhang is out of the way. Well, Jay, you know, you've given us your view on a couple of indices. What about the auto space? That's the one that's really cruising ahead. It's getting tired.
Yeah, auto sector has been the leader and it's been outperforming since March, but I think it's coming close to a peak point. Once again, there's no reversal there yet, but as long as the index can keep above 12,600, I think it's still trending up. But watch out for key stocks within the space. The leaders has been M&M. If M&M were to drop below 1,200, that'll be a warning sign that the rally is turning down. Also watch Maruti. Maruti, if you were to keep below 85.50 and 84.60, that's not a good sign. So as long as these levels are respected, I would still think the sector is still trending up. But from a sectoral space itself, if 12,600 gives way, I think that the rally is done for the auto space.
Got that. You know, you began by kind of also pointing to what the US does from here. But, you know, for a while now, it's not really mattered, right, what the US is doing or not doing. The US, for example, only now is starting to see its own bounce, right? Last week it was up 4%. This week, so far, so good. How are things set up there, according to you, Jay?
Yeah, in my opinion, the US markets have already peaked in August. And there is, even if it were to exceed, this is not a start of a new leg up for the US markets. I would probably think if it were to exceed the August high, that will bring in the record highs for the Indian markets. So we'll probably see somewhere close to 4,500 and turn lower. But you know, if you look at the individual sectors out there, all of them are showing classic signs of a corrective rally rather than a start of a new trend. So, you know, the bull-bear divide at the moment is 4217.5 on the S&P futures. If the markets were to keep below that, I think it will start trending lower immediately. But if it does get taken out, I would look at a slight push somewhere close to 4,400 to 4,500 on the S&P futures, and then a turn down, which will be a hard knock for the markets.
Okay, all right. Jay, what about individual stocks? You're looking at you have a couple of long trades, I think, on Relaxo as well as Deepak Nitrite. What are the levels you're looking at on those two?
Yeah, that's right. Relaxo is coming out of a rectangular consolidation. Usually when a market breaks out of rectangular consolidation, the distance it travels will be the width of the rectangle. So it's got a very nice pattern breakout out there. So I'm expecting Relaxo to go to probably record highs, but I'll be conservative because of where the overall index is. I'll put a price objective of somewhere close to 1250 with a stop at 950. Deepak Nitrite, you know, along with other chemical stocks, is doing well. It's a bit late. You know, we had a call on Hickel a few weeks ago at 270. That's actually, if it were to take out 372, that's probably going to record highs. So Deepak Nitrite is doing a similar pattern. Stop below 1950. Price objective of 2500. That's also conservative. Maybe it'll go to 3000 if the rest of the sectors were to, the rest of the stocks in the sector were to start trending up. So keeping things a little bit conservative here.
All right, Jay, we'll leave it there. Thank you very much. Good speaking with you as always. And thank you for running us through what you're making of things at this stage. Well, you know, as reported earlier on the channel, the insurance regulator IRDAI has mandated that all insurance policies will need to be dematerialized. Now, this will start this December. My colleague Yash is joining in with an explainer on what the impact of the move could be. I mean, the costs involved, who will bear the costs and who will benefit. Depositories and other entities are the ones he focuses on. Yash, over to you.
CNBC-TV18 had reported on September 6th that the insurance regulator was considering mandating that all insurance policies be dematerialized. On the 7th of September, we told you that the mandate has indeed come through. Let's now dive deeper and look at the big beneficiaries of this move and the cost involved for insurance companies. Let's spend a minute to look at what this dematerialization move really means. All new policies issued from December 2022 will have to be compulsorily issued in a demat form. And by December 2023, all old or existing policies will have to be brought on the demat platform. Many relate this move to the dematerialization of shares. The move would mean converting physical insurance policies into modifiable online policy. Insurance policies will be put on a separate demat platform called the EIA, or the Electronic Insurance Account. This EIA will have all policies belonging to an individual, like his life insurance, health insurance, or motor insurance policy. What does it mean for policyholders? Since all policies belonging to an individual will be in one account, servicing these policies can be done all at once rather than reaching out to individual insurance companies. Dematerialization will remove paperwork and physical policies. Finally, policyholders will be able to take loan against their insurance policies just like they do against shares. Now, let's get to the meat of the story. Who benefits? Well, in long run, this will benefit insurance companies, but the depositories are the ones who enable this process, and they will be the big beneficiaries. NSDL, CDSL, CAMS, Carvi are the big depositories analysts are focused on. My calculation suggests that the depositories here could have an opportunity to double their revenue. Why do I say that? Life insurance industry sold around 3 crore policies in FY22, and the cost of dematerializing a single policy estimated by insurance companies and industry experts is around 50 to 60 rupees per policy. That would give depositories an additional revenue of about 150 to 180 crore rupees. General insurance companies, they sold 50 crore policies last year. The same calculation on dematerialization cost will give depositories an additional revenue of 2,500 to 3,000 crore rupees. Finally, the old active life insurance policies will also have to be dematerialized. There are 30 crore life insurance policies, and dematerialization of these policies will bring revenues of about 1,500 to 1,800 crore rupees. All put together, there could be additional revenue of around 4,150 to 4,980 crore rupees for the depositories. Compare this to the current revenue which depositories make. NSDL's revenue in FY22 stood at 821 crore, CDSL's revenue stood at 606 crore, and CAMS was about 927 crore. A very conservative estimate would show that these depositories could easily double their revenue. Now, insurance dematerialization will certainly entail a cost for insurance companies. This right here is a breakup of the annual recurring cost and the one-time cost which big insurance, both life and general, will have to take towards dematerialization. On the positive side, insurance companies will save the printing and the delivery of physical policies. Dematerialization will also restrict frauds. Also, it will improve the renewal ratios and hence the persistency for these insurance companies.
Splendid piece. Thanks a lot for that, Yash. For the time being, though, we'll slip into a short break. You come back, we'll talk more on the markets with Rupen Rajguru of Julius Baer. And as always, Nimesh will be joining in our special segment, D-Street Chatter. Welcome back. The mid-cap index continues to lag. The headline index, though, is moving towards that 18,100 odd mark. Time for our special segment, D-Street Chatter. Nimesh is standing by to give us a quick insight. Hey, Nimesh.
Hi, Nigel. So, market at day's high. There is a bit of momentum as well for the bulls, and now people have started talking about the new, new highs as well coming very soon. But just a bit of a caution view. That's a mixed feedback that I'm getting in today. So, while the larger institutional flows are still positive, some bit of profit booking is seen across the board. From the domestic investors, and these are all large domestic investors, who've been in the market for very long, and it's just a tactical positioning, so to speak. Bit of profit booking is what I understand. Not like they're negative on the markets, but they're trying to book profits at these higher levels and try to lighten their positions. So that's a bit of a contra view which I've picked up today from the dealing room. So that's something to watch out for. Again, in terms of flows, as I said, the institutional flows are strong with a positive bias. Again, the buying seems to be clearly on the financial names. So large private banks are well bid, and a bit of selling today in the OMC name. So that stands out in terms of flows. Technically, both Nifty and Bank Nifty are above the crucial breakout level. So that's supporting the market, that's supporting the momentum as well, and that's seen in the mid cap and small cap. As I said, while institutional flows are still strong, a bit of a contrary with some domestic funds and influential investors have started booking some profits at these higher levels.
That's interesting, Nimesh. In terms of specific stocks on your list, what do you have today?
Well, Prashant, so the first stock on my list is AMI Organics, a huge block, 7% equity has changed hands. I believe some domestic investors were on the buy side, and most likely the promoter entity was a seller in today's block. So the disclosures will be important today evening. So that's something to watch out. That's the first one. The second stock is Tech Mahindra. Yesterday there was a good amount of buying in Infosys. Today, that's the case with Tech Mahindra. So very strong buy flows at a leading FI desk. The delivery volumes are expected to be quite high in Tech Mahindra, and there is consistent buying now periodically in the technology names in the large cap. So Tech Mahindra stands out today in terms of flows. The third stock is Zomato. Again, a day when the stock is up 4-5%, largely on back of strong buy flows. So every now and then you keep seeing that kind of strong flows, and that pushes the stocks higher. That's Zomato in today's trade. And the last stock is Federal Bank. While there is a lot of momentum in the bank stocks, a lot of bank stocks are doing good. Federal Bank in the last few days has been under pressure and is under pressure today as well, largely on sell flows at a leading FI desk. So it looks like some long-only fund or some large fund seems to be selling out Federal Bank, and hence that stock is under pressure within the overall financial names.
All right, interesting list as always, Nimesh. Thank you very much for that. Well, it's rock solid, the index that is 135, almost like it's pasted on the tape, not really very much by way of movement. Look at that, just started higher and remains steady through the course of the day. Mitesh Thakkar is with us to tell us what to buy or sell today for a reverse trade tomorrow. Mitesh, hi, afternoon. What do you have for us?
Good afternoon, Prashant. On the stock side, IndusInd Bank is closing at day's high. So BTST with a stop at 11.55 for targets of 11.80. And after a long time, GMR has come on the radar. I think there's some kind of medium-term breakout taking place over here. First timing, let's take it as a BTST call with a stop below 40 for targets of 41.5.
Okay, all right. Thanks for that, Mitesh. By the way, we'll keep an eye out, as Nimesh said, on AMI Organics. It appears the street is quite excited out there. In the last 1 hour or so, post that large trade, the stock is up close to around 5%. So just keep an eye out on AMI Organics. Disclosure is important post today. Well, Rupen Rajguru, who joins us of Julius Baer. Hi, Rupen. Always good speaking to you. What are you making of this move? India standing out. We're not cheap, but yet we continue to move higher. Do you think on the index itself, we're nearing the higher band?
Yeah, hi. Afternoon, Nigel. And, as they say, market always, surprises both the optimist as well as the pessimist. And right now, probably market is surprising the optimist as well. This year, if I were to just put it in a word, India, at least as of now, appears to be decoupled. I know it's a very widely used term, but both from the earnings growth perspective as well as from the economic growth perspective, India is an outlier in the global context. While India weathered the storm of relentless FPI outflows for the first 7 months of the year, in last month or rather 5-6 weeks, what we have seen a heavy influx of FPI inflows, and hence typically the FPI gets into a larger caps or buying of the index, or it might be ETF money, and hence now we are seeing the index scaling probably not exactly a lifetime high, but it is inching towards that. So at this point of time, purely from a fundamental perspective, definitely I don't see a big upside, because at say 21 times next year's earnings, we are not cheap. But the technicals and liquidity has its own role to play. So, but at this moment, as Ben Graham has said, that a realist will sell to an optimist and buy from a pessimist.
But it's optimism all around, Rupen. That's well said and aptly used, that phrase. But even companies that we speak to, right? I mean, forget what market participants think, but companies generally, there's a fair bit of optimism about future prospects, etc. Maybe the only dark cloud is that across a range of industries, and I think it's very well known and well accepted, that lower priced or entry level segment is not doing too well. I mean, in some cases it's doing badly, but the premium end is actually growing very, very well across the board. I'm talking about consumer sectors, but I mean, that would flow through in financial services and other things as well.
No, you're absolutely right, Prashant. And in fact, last week, we met probably close to say 30 odd companies across sectors. And I think the at a broad level, 2-3 key standout themes. One is, there is no demand destruction, in the sense the fear that there would, because of high inflation, there'll be demand destruction. So absolutely no demand. Nobody complained that there is lack of demand. A second theme, I think, which is probably we'll see more often, the rural recovery is also pretty strong. Some of the collection efficiency in rural India is like almost 97%. So that again is a very strong number. And I think today one of the leading brokerage house spoke about MFI industry, which is a beneficiary out of it. And thirdly, as you rightly said, the premium segment doing exceedingly well. So the top 5 or 10% of India, which, as they say, India, there are like 5% of India's earnings is per capita is closer to Europe's per capita, and I think that segment is doing exceedingly well. So you are absolutely right. There is no issue as far as the demand is concerned. Why? Overall, there is a good amount of optimism. The festive season, I think all the companies, including the automobile companies, are very, very optimistic at. So yeah, that's the right now all-round optimism. But as they say, how much of that optimism is in the price, and that's what we have to be cognizant of.
Okay, all right. Rupen, I was reading a couple of notes today with regard to diagnostic as well as hospitals. I know for the last few months, in fact, the street is coming to terms with maybe the best is behind them. Maybe, in fact, margins will compress from here. Competitive intensity is likely to go up. What's your view on the space, the diagnostic, the hospital theme from here on?
So, both are part of the India domestic story. From a diagnostic perspective, if I were to take it that first, the big theme there, and I think one of the reasons why we like it, it's a play on shift from unorganized to organized. While the competitive intensity has gone up, last year they had a very high base because they had that one time of COVID-related testing which happened, which bumped up their revenues and which market gave an even higher valuation to that revenue, which were not sustainable. And this year the reverse has happened. That revenue has neutralized and the pricing have gone down. From here on, that big theme remains. So we remain positive on that theme from a 3 to 5 year perspective. The ROCs have come off, but we believe that's just a passing phase and it will again pick up. So we remain optimistic on that theme. Coming to hospitals, while hospitals, again, there are, we look into those hospitals which, big amount of capex is already done. And I think that a lot of these hospitals where the capex is done will be a big operating leverage play. So the return of medical tourism and also people doing the elective surgeries which they had postponed during COVID time. So that will come back. So we don't see any reason to see any slowdown there. So we, in fact, are positive on both of the sectors.
Rupen, do you like any of the capital market plays? I don't know if you heard or you were listening while our colleague Yash was presenting some data on the opportunity the depositories have because of the insurance dematerialization. It's actually almost like a new market segment opens up, right? So it's so far only stocks, but now insurance also in a dematerialized form, and could at the rates which Yash mentioned per policy could be a pretty large opportunity.
No, absolutely. There is a big scope and big size of opportunity out there, and we have to say how this entire insurance dematerialization plays out. But all these capital market intermediary, and as I would call them, they are rent seekers because their revenues are also linked to the transactions which people do. So there is a bit of cyclicality. While there is an annuity aspect of the business, but there is also some bit of cyclicality as well involved in those businesses. So while from a 5 to 10 year perspective, definitely those are the good segments to be in. But right now, what's happening is, again, some of these companies are trading at a valuations, whilst they have seen some corrections, but we would wait for better entry pricing in these capital market intermediaries.
Okay, all right. Final question then, Rupen, before we let you go. Cement, it's seen a good bounce back. You believe it's good for more? And also, what's your take on the real estate space? Both of them normally go hand in hand as well. Do you think the best is yet to come?
So Nigel, interesting question, and real estate is part of our big theme, wherein we are clearly seeing, beginning of or a real estate cycle, and the fortunes of cement is closely linked with the real estate cycle. So on cement per se, we saw last quarter, in fact, this quarter also, there would be pressure on as far as input pricing is concerned. But despite that, the quarterly numbers, that is the first quarter numbers, were quite strong. And in fact, that's why we have seen a big recovery in the cement stocks. So as a theme, what we believe over the next 3 years, the overall demand for cement will outstrip the supply. We expect the demand growth at a country level to be upwards of 8% per annum for next 3 years on as far as volume is concerned. Probably supply will grow by 5%. So that, and hence, which is augurs well for the overall pricing of the sector. So while now the input costs have come off, we have seen the petrol prices, coming off significantly, and so we will see the margins, especially from the December quarters, the EBITDA per ton will go up. So we continue to like the cement space, and historically, pre-election, 18 months prior to election, the general election, we see a lot of activity on the infrastructure side, which augurs well for cement as well. And on the real estate, as I said, we are 1.5 years into this cycle, and typically the real estate cycle lasts for say 6 to 7 years. So we are probably not even in the middle of the real estate cycle, and I think all the numbers what we are seeing, be it the registration numbers, are pretty strong. So we are positive on the real estate space as well.
All right. Well, good speaking to you, Rupen. Thanks so much for joining in and sharing all those thoughts. Positive on real estate as well as the cement theme. By the way, the stock that we were talking about, Ami Organics, the street is sensing that a rather large name will be on the buy side, it seems, because the stock is spiking up and is just moving from strength to strength currently at the high point of the day. Slip into a short break, come back. We'll wind down the markets with market closing.
Okay, welcome back. So we've got, 3 minutes to go as far as market closing is concerned. So I think we should start to wrap up things right here. I mean, lots of names in the broader space. And I just want to highlight the market, the breadth of the market, which has narrowed down quite a bit. 1,100 stocks on the NSE are higher and 1,069 stocks are lower. So this is not a, wildly one-sided advances to declines ratio. Far from it. So some amount of profit booking in the broader market also starting to creep in. So let me just take a look at what did very well. I'll start with the sectors, of course, which were led by the metal space, the Nifty Metals Index doing well, the FMCG Index, which was the second best performing space, and the private bank space, which did quite well as well. In the Nifty, there were names like Tata Consumer, there was Titan, which stood out from the consumer space, IndusInd Bank, Bajaj Finance doing well. And of course, we had Midesh pointing out IndusInd as a trade as well, closing at the day's high. Bharti, Britannia and Larsen were some of the other large cap gainers that we had with us today. All in all, I mean, a pretty good day. But broader markets is where there was a lot of action, a lot of two-way action, both up and down. Nigel.
Well, that's right. No two ways about it, Prashant. Today, the broader markets were relative underperformers. The advance decline ratio from way number of advances in comparison to declines, it almost ended pat. Even Stevens out there. Stocks that were losing out, Astral came in for some selling. Crompton Consumer as well was down in trade. First Source as well did see a bit of a knock, and Dalmia Bharat did put back a wee bit in today's trading session. PI Industries as well could be added to the list. A few more losers then to point out. Igarashi Motors had a good run, that pulled back today. Quick Heal as well did get a bit of a knockdown. And Uptown, it had a one-way run upwards. Now, in fact, it's seen a bit of a reversal. A few more names then from the winning basket. Trend did well, 4.5% higher. L&T Finance Holdings was spiking up. That, in fact, was up closer around 4%. You had SRF as well. That was part of the winning list, and that stock did pretty well. DCB Bank was the other one that did pretty well. A few more gainers. You had Gujarat Apollo. The stock was flying away in trade. Coffee Day, for some reason, some bit of speculation playing out there as well. That stock did well. Holding companies did well, actually. Tata Investments, you had Bajaj Holdings, as well as Maharashtra Scooters. All those stocks were flying away in today's trading sessions. And as we told you earlier, Ami Organics as well. That's the other stock that ended at the high point of the day. The last tick, in fact, was at the day's high. The details of the large trade that took place in the final couple of hours will be out later this evening. For the time being, though, we'll have to wrap up on this edition of Closing Bell. You don't go anywhere. Commodity Champions comes up next.